Hi, I'm Malcolm Grahamwood, and I'm here at Core Finance for my CEO interview. My guest today is Marshall Abbott, CEO of Arrow Exploration. Marshall, it's great to have you back again.
Malcy, it's always a pleasure to be with you.
Lovely to see you. We have so much to cover, and let's get straight in, because last week you announced that you've been some drilling activity, so why don't you just give us an update on where you are at the moment, and then maybe a run through of the drilling announcement from last week.
Certainly. So our current operational tempo is at an all-time high. We've got a service rig on the move going to the RCE structure. We've got a drilling rig sitting at the Carrizales Norte structure. We're actually completing the C7 Carbonera today. We have high expectations for the flow rates on that particular well. The seismic 3D, 130 square kilometer 3D has been shot and interpreted. We're very excited with the hotspots that lines up. So we are going to have a rig at Carrizales Norte for the next 15 months anyways. And we'll be using a second rig to exploit not only the RCE structure, where we've got 3 wells planned very quickly, but we've got a 2-well plan going up at Oso Pardo with a separate rig before year end. So we're looking forward to rather heady exit rates.
Absolutely. I mean, I was going to ask later on, so you might as well do it now, because when we last spoke, the 3 wells at RCA and the Oso Pardo, that's going ahead as normal.
It is.
And then right now, we'd love to tell us about the CN3 well. Had a few little niggles there, but basically, things are looking good, and obviously it's led to C7. So what's the form? What was this? We had problems about cement job, or?
Yeah, so CN3 at total depth, we had encountered 120 feet of Ubaki reservoir, very clean.
Yeah.
Logging tools indicated that the bottom 20 feet were below an oil water contact. So that was the first well that showed any kind of bottom water.
Right.
And which we're quite used to.
Yeah.
And so we performed a cement job, turned the well on, and the water showed up immediately.
Right.
And so the reasoning, we feel, the technical interpretation, is that the reservoir is so good at Carrizales, multi-Darcy permeability, 28% porosity,
Yeah.
that it sucked all the water out of the cement slurry, drying out the cement,
Yeah.
and opening the door for channeling up between the rock wall and
Yeah.
the casing.
Yeah.
And when that happens, there's no remedial action you can really take that's effective or inexpensive. So the way to do it properly is you have a staged cement job with foam, and you rotate at the same time, and that way you get competent bond log. But it's a testament to the quality of the reservoir being 4 Darcy permeability.
Absolutely. As a result, you've learned a lot from that already. So 2 things. First of all, you mentioned the C7, which you said is almost already done.
Yes.
And you'll be hopefully producing that very soon.
Yes, so we put a bridge plug over the Ubaki moved up hole to the C7, and we've perforated it 3 days ago. We have 300 barrels of load water to get out of the hole, and we'll be reporting rates probably in the next couple of days. But we expect that rate to come on at 360 barrels a day net.
That's very handy, isn't it? It's
It
coming
is.
after the Ubaki. So we're now focusing on the Ubaki formation, and we've discussed a number of times about whether you use horizontal drilling techniques in this one, partly because it's a better way of drilling it. It's for that formation, and partly because it may extend a bit further. Talk us through your thoughts on the horizontal process.
Sure. So just to give quick field morphology, right now we are focused between 2 sets of faults, and the Ubaki is in the center of that fault orientation.
Yep.
We have reason to believe on the 3D that the Ubaki actually extends beyond the fault boundary, which is great.
Yeah.
Now, the Ubaki, being anywhere from 60 to 100 feet thick, is perfectly tailored for horizontal development. I've spent half my career in Canada drilling horizontal wells in thick reservoirs.
Yeah.
We're experts at it. So there is the intellectual capacity in Colombia and the technical capacity in Colombia to expedite and execute horizontal drilling Horizontal wells down there will cost about 1.5 times a vertical. They
Yeah.
give you 3 times the production rate and 3 times the ultimate recovery. So there's no question in our mind horizontals are the way to proceed. So we are proceeding with a development plan of 6 horizontals to displace 13 verticals. So we're saving money in that regard as well. And those rates should come on at anywhere from 900 to 1,500 barrels a day.
And when will that start? When's the
So we have the rig moving to the RCE structure as we
Yep,
speak.
yep.
We're going to drill 3 wells at RCE. They'll take 3 weeks each, and then we'll
Yep.
move the rig back. So we're contemplating January 1 spud.
Perfect. Gamma drilling bit that you talked about.
Yes,
Talk
yes.
to me about that.
Okay.
That was new to me. It sounded very exciting.
Yeah, it's an interesting technology. So when we're using typical downhole tools to calculate deviation and angle, we have a gamma ray measurement device on the drill stack, and it's typically 60 feet behind the bit. That's too far. And so there's a relatively new tool called gamma ray at bit. It's 10 feet behind the bit. And what that allows you to do is steer the trajectory of the horizontal leg with very little deviation. You don't want it to
Yeah.
be porpoising in and out of the zone. You want to be going right down the highway in that zone.
Yeah.
And the unfortunate thing about that is my geologists have to stay up 24 hours and looking every 5 minutes at the trajectory. So that's the way to make a good well work.
Good. And it doesn't take that much longer than the vertical well anyway.
That's
and
true.
It's much more productive, which is good. I'd like to concentrate a bit. I mean, we've glossed over that a bit, but I'd like to have a look at today's reserve report, which when it came out was actually way better, certainly quite a lot better than I was expecting. And I get the impression that, I mean, a bit better than your pre-drill estimates, and certainly up with good expectations. Why don't you talk us through it? Talk us through we got, a lot of 2P and a lot more 3P and some. Tell us all about it. It's exciting.
So on a 2P basis, we're $127 million at, these are US dollars, at 10% discount. 3P is well above that.
Yeah.
None of that includes drilling with horizontal wells. So to factor in the benefits that you would gain in both recovery and tax rate on a horizontal well, certainly point to that's the mechanism to move forward. So we're pretty excited with that. If we were to compare apples and oranges with our year-end 2022 report with our midterm 23 report right now, we'd be well in excess of $270 million 2P.
Yeah.
And we have a market cap of $60 million. So through execution and not faltering, we think that the share price is going to respond over the course of time.
Well, it certainly should do, because that's where, my sort of almost top of the range target price is, proves that that 50p a share, which is my target price, broker forecast out there at 55. They in themselves should be fairly conservative, if you talk about the valuation that's been put on it. And do you take a big difference between 2P and 3P, or do you just take the revenue in dollars as given on a discount?
Well, we prefer to err on the side of conservatism when it comes to
Yeah.
3P. 2P is positioned right now for consistent upward revisions.
Yeah.
So the recovery factor that we were granted on 2P, I believe, was 24%. We think we can get upwards of 35%.
And that would add, is it the 1.8 million on the 1P, which would then go screaming through the
That's right.
target, which is well, it's highly conservative. That's the point I think we're all trying to make now. And putting all those, just nipping back to because production targets, you're going to be producing, certainly when you come to the big turnaround of the year, you're starting to produce more than you had thought when you first came to the market, aren't you?
That's true. And it's our goal at year-end exit rates to display to the market that our production growth is far outweighing our decline.
Yeah, well, that's no mean feat, Marshall.
It is no mean feat. And And we operate our reservoirs with stewardship. So we want to make sure we're not pulling too hard on them to get early water breakthrough and curtail ultimate recovery.
Yeah. And as you said, you're not just, you've got the 3 RCE wells, which you're positive about, Otsipado, and you said that the work you've been doing elsewhere on the seismic has shown positive.
Oh, the seismic is paying off in gold. There's
Is
no
it?
question.
Yeah.
Yes, we can actually image the Obaki Reservoir on the 3D data, and it shows that it's extending to the west beyond that little fault break. And there's an Obaki channel that extends for about 80 kilometers on the 3D. We're very excited to test that at various points all the way up there.
Yeah.
Because there are faults that take place through the Obaki, their trapping mechanism, and once you get that, there's a very high chance of success. So we're very excited with what the 3D has shown. There are also 4-way closure highs in and amongst the middle of the overall survey. We've got the Mataguafa Attic prospect. We're very excited with that. There's about 5 million barrels trapped there. So there is enough inventory to keep us drilling for the next 3 to 5 years with doing nothing else.
And prices are good. And obviously,
prices are very good.
Better at the moment, I would have thought.
So $87 Brent. The Ubaki crude is heavier. We suffer about a $9 discount to Brent. So it's still very lucrative.
Yeah.
And we're currently sitting on 10.8 million of cash and cash flowing 2.5 million a month. At year end, we should have close to 17 million in the bank.
Yeah, I mean, that's my next question. So you haven't any debt. You've got
no debt. We had a note to Canacol that we paid off last June.
Yeah. Now, talking about Canacol, there's a warrant. We talked about this before. Mm-hmm. There's a lot of warrants out there, aren't there?
There are.
Which they have, and you as management have. Have you got any? Can you tell us what your intentions are about that, or do you not know, or wait and see, or?
Well. For context, we're a spin-off of Canacol, and they own 20%.
Yeah.
And we have a great working relationship with them. We rely on their in-country gravitas to wind our way through the bureaucracy, and they're very helpful. They're valued members on the board and a valuable sister company. And so in the number of meetings we've had with them, it has been their intention to exercise the warrants and hold the stock. And management is doing the same. So that's bringing in an extra $4.5 million by year end.
All right. Well, I mean, the market should be very happy with that.
Yeah. I think some of the feedback I got at the conference last week was there's this overhang because of the warrants.
Yeah.
It's going to solve itself here very quickly.
Good. So it looks like my valuation is a bit on the low side after all. And you've got the. You said to me last time that you had 1 or 2 M&A targets in your sights. You weren't going to stick in it. Now that you've got so many things going on, have you got plans to extend or have a look in the market, or with Canacol, or just existing fields where you might get more?
Well, one message that we don't want to send out is that we're going to be raising equity anytime soon.
Yeah.
With the operational tempo we've got and the treasure that we're pursuing, as I mentioned, that's going to keep us busy for 3 to 4 years. It's an obligation of a company to keep its eyes peeled on looking for accretive acquisitions, but right now we're focused on the operational tempo. There are targets we'd like to have, and ultimately we may end up with.
Yeah.
But certainly not going to do it when it's not accretive.
One final question before I get to the final question is, as is always the case, the political situation in South America has been even more at the moment with elections in a number of countries and so on. What's the political situation in Colombia like at the moment?
Very spicy.
Yeah.
So from a personal security risk, it's fine. Colombia's fine. The government has lost significant popularity for the 18 months they've been in power. They're unable to execute on their promised social programs. Their popularity rating is below 20%. The president has arrested his son and accused him of funding the presidential campaign with Cali cocaine money. So they're in a bit of a mess. But Congress is solid. And in fact, as far as democracies go in Latin America, they're still one of the strongest democracies.
Yeah.
So it's fine that way. And they haven't changed the goalposts on the oil and gas extraction business, so it's business as usual.
That's good.
They realize it's the cash
It's,
register
it's
of the company.
what they need. Yeah, yeah. So, Marshall, we have been through the up-to-date operational situation. We've been through a fantastic reserves report. We've talked about horizontal drilling. We've sorted out the warrants. What's your plan? Give us encompass all that in how you'd like to see Arrow over the next 12 to 18 months. I know you pretty much said it already, but a bit of an overview would be lovely.
Well, on a per well basis, on the verticals, we forecast 320 barrels a day. So there's 5 wells immediately that are going to be drilled using the 320 barrel a day forecast. On the horizontals, we're forecasting triple that. And so we hope to have 11 horizontals down by the end of next year and 5 plus verticals, but not including the 4 exploration wells that we're going to drill.
Yeah.
Very exciting prospects in the next 12 months.
Marshall, it sounds like everything is going really, really well for you at Arrow. Thank you very much for taking your time to come in on your trip to London.
I appreciate your support and interest, Malcolm.
Really love seeing you, and I think it's a fantastic story. My name is Malcolm Graham Wood, and I have been fortunate enough today to be interviewing for my CEO interview Marshall Abbott, the CEO of Arrow Exploration. I'd like to thank him very much indeed for joining us, and I'd like to thank you for watching. Thanks very much. Bye now.